Well, good morning and pretty quick Merry Christmas. If everything's working okay, seems like it is. Stream is flowing, and yeah. All right, so it's 8 o'clock in the morning on the 23rd of December, 2024. This is my virtual trading journal. The idea here is that I stream my video from my trading platform, and I have the insight into what I was thinking by my narration or my dialogue here. So that's the plan, and then I'm able to review it on any device, is why I stream it up to YouTube. And it's also provides transparency and accountability. And all those things are important, I think, in the development of a trading business, which is what I'm focused on doing. All of the times on my charts and that I refer to are Central Standard Time. And of course, this is for no financial advice or trading suggestions or anything else. It is my personal virtual trading journal, but I share it. And if it could help someone, fine. There's a delay. So even if you tried to copy the trades, you'd get your ass kicked because YouTube has quite a substantial delay here. I've noticed that sometimes I monitor the stream on another computer I have here in my office. And I've noticed that sometimes it's up to more than a minute delay. So obviously that could be disastrous if anybody was trying to do that, which, the idea is to, even for myself, the idea is to be able to review the stream and understand what I was thinking or, see if my logic was correct or if I was being affected by the lizard brain there, and subjecting to FOMO or whatever else. All right. So that's, I think, pretty much all of that. There's a disclaimer also in the description here and some links that are important. So those are all the things that are important from the point of view. Oh, well, there's another thing too. I have a commitment not to take any trades off the stream on this account. So that's why it starts now at 8 o'clock in the morning and it will continue through until 1500, which is the cash close this afternoon. That way I don't have any situation where I see a setup occurring or whatever and I want to put a trade on. And I can't because I don't have the stream up. So that may change. It's these real long 6-7 hour streams are pretty ridiculous. I do chapters throughout the day so that any stream that has trades on it remains public. And the chapters are there because obviously, including myself, who's going to sit and listen to 7 hours? All right. Numbers out this morning. Believe it or not, there is. Consumer confidence is out at 9 o'clock. Nothing else. And of course, the big elephant in the room is day after tomorrow, Christmas. I would suppose that any A-list or varsity traders have long gone. They're busy buckling up their boots and strapping in for skiing at Aspen or someplace. So I don't know, with the more electronic the world becomes, that used to be really the case years ago. I mean, volume would drop off and it would be real. There'd be no liquidity and market would just be jumping all over the place because everybody would be gone. Anyway, on to the pre-market here. The overnight is pretty obviously, well, first of all, I guess the way to start this is my trading platform and it is Bookmap. There's last night's open, traded up a little bit and then sold off hard. And here we sit. This is my IRT charting package, which these are the only screens I use to trade with. This is a Renko chart for the ES, and these are all now obviously rolled over to the H contract, which is March, H25, which is right there. This is the overnight. This is Friday's RTH period. This is a Renko of the NQ, of the NASDAQ. This is a micro composite or high time frame chart of the ES. And this is just the regular trading session, 8:30 to 1600. And each one of these candlesticks is a day, I'm sorry. The idea is that wherever price overlaps, I draw a volume profile around that, and by doing so, it generates a micro composite volume point of control and a bunch of other metrics. This is the current one. Now, this is the giant sell-off from the Fed. And here we are bouncing around down here. So I didn't include that breakout candle, but I included these two. This is Thursday and Friday. This was Wednesday. And you notice these red and green lines, they're the high and low volume nodes from this micro composite volume profile, and they push automatically to Bookmap. I'll show you what column in a minute, as do the price levels, session prices for the ES, also push to Bookmap. And this is the market profile chart, and you can see what a hell of a day that was. And actually, Friday was quite a big day too, as far as a trend day. So that's the charting. This is the Investor RT or IRT, as I refer to it. Back to Bookmap. Okay. The columns from right to left, well, this is the book, obviously, or the dome. This is the high time frame or the micro composite column. You can see where I manually enter various things here. The POC's down here at 60 somewhere. Right there. You'll see that ties across to the micro composite volume point of control right here. And the rest of these are all entered manually. So, as I said, and these are gap high, gap low, and stuff like that. My convention sort of is that when it's the current MCVPOC or current levels are red, and then I change the text to black for, recently, not the current one, but recent ones. The high volume nodes, if we can see some here somewhere. There you go. These are the high and low volume nodes, which will be pushed. And they're only pushed in the daily or the RTH session, remember. So that's why they're up here now. That's from Friday. And then this is the full session volume profile, which started plotting last night at 1700. And will continue through today at 6 to 1600. So this is the full session or the Globex. This is not the ETH or the overnight, because the overnight session stops trading at 8:30 this morning and it changes to the RTH session of the regular trading session hours, which is this column. And this will reset at 8:30. This is the Delta, which I don't really think I use anymore, and I'm going to get rid of that. I think. I don't think I ever noticed that I use it. And I can easily hide the column to make more space. This is the chart volume profile, which is another kind of questionable one, but I think I'll leave it on. This just plots a volume profile for what data is visible on the screen. If I go like that, it gets bigger. If I go like that, it'll get smaller. It just plots the volume or the trade that's visible on the screen. This is a notes column, which is pretty important to me. This is where I enter the statistics associated with these various price levels based on the open type. I enter the migrating volume points of control. This is the naked volume point of control from the last RTH auction, which was Friday. This is where the POC closed last Friday. And then, one thing I do here, is I enter the title of this column. I change to the open type of each day. And the reason I do that is so that I don't have to scroll in, out, or up or down or look anywhere else. And I can look right in this area right here and see pretty much all the data that I'm interested in trading right here along the hard right edge. So today, the open type is looking to be lower in range. So it's in range. And how do you determine the open type? Well, it's real simple. Maybe best seen, no, it could easily seen here. So here's where we're trading right now. And here's the previous RTH close. There's only two criteria for the open type, and that's where today's RTH session opens as it relates to the previous RTH session close and the previous RTH session range. Right now, we're going to open lower than the close and within range. Lower in range. And that's all there is to it. And these monkeys could pull this up across the close here and make it higher in range or whatever. We'll see. I'm not going to, whenever it's close like this, I don't enter all the statistics because I don't want to have to go back and change them if they happen to run it up, just going into the open. And how we determine the statistics for all of these is pretty simple. On IRT, I have a study right here. And here is the 4 open types. Friday was lower out of range. Today we're looking to open lower in range. And this is also very simple. It looks back at 1,945 days, or roughly 2,000 days. Of these total days, 1945, we opened lower in range 577 of those days. Of these 577 days where we opened lower in range, price revisited the overnight volume point of control 488 days for 84.5 or 0.6% of the time. So we jump back over here. We go to the overnight volume point of control, and it's 84.6. And that's all there is to it. So the overnight low is also another biggie typically. And that's 66.7% of the time. The overnight mid is typically the second most probable, and that's 83.7. And that's how you do it. Now, I'm not going to enter all the rest of them because I don't want to have to change a bunch of stuff, right? But the highest probable suspects are always the overnight high and low, the previous high and low, the overnight volume point of control, and the overnight mid. Those are, in my opinion, the most prevalent. Now, I suppose the previous high is right there. That's the overnight high, and that's 51.5%. All right. So that's how the statistics work. The price levels, there's no indicators on my charts or my book map. There is a VWAP for the full session and one for the RTH session. There's a mid for the RTH session only. There's a POC for the overnight and there's a POC for the RTH period. The difference, they're both yellow. The overnight or the full session is more muted, and the POC for the RTH session is a brighter yellow. And none of these levels are mysterious. The POC is nothing more than the price at which the most contracts have traded so far in the session. So at 60.21, the most contracts have traded in the full session. That's it. The minute one of these numbers is higher, that's where it's going to go. That's all there is to it. The IB high and low, also not mysterious. They are simply, it's an old acronym from the market profile days, meaning initial balance. But in reality, it's just the high and the low of the first 1 hour of the RTH trading session. That's all. And the rest of them are just by their name. So, one difference between value area low and developing value area low. Developing indicates the current auctioning session. Value area high or low, which is hid behind the mid here. Current regular or just plain value area high and low indicate the previous RTH session. And that's it. And then there's stops and sweeps and accumulation markers over here. And let me get this opened up a little bit here. The varying shades of lighter colors here indicate the liquidity resting in the book. So that's about that. Now we have to be able to trade. That's pretty handy. And the way you do that is I use market brackets, multi-brackets, sorry. And in this case, I'm going to use a 4-lot contract package. The stop for all 4 contracts is 12 ticks. The first risk-neutral profit target is at positive 12 ticks for half of the size of the package, whether it's a 2-lot or 4-lot or whatever. The minute this profit target is achieved, the trade is risk neutral. The worst you can do is scratch unless you move the stop away from entry. Then you have more problems than trading. Then there's a runner at 24 ticks and a runner at 48 ticks. In order to trade on Bookmap, you have to click this little red padlock up here, not red, and select a trading type, the chart, the dome, or both. If you select chart or both, this column right here, called the live data or active data or whatever they call it column, is enabled. And any place you click over here, you'll enter a trade or an order. This is the dome. I prefer to trade only with the dome because I initiate my trades with a keyboard. And the only place I can manipulate them, or orders, or stops, or targets, is here on the dome. And I'm not going to accidentally click over here. Very, very unlikely. Much more unlikely than happening to get the mouse on the wrong side of this little yellow line, or brown line. So that's why I do that. Then I confirm that it's the right package size. And I click this padlock again, which you notice now is turned green and open because we've selected something. I click it again so that I don't trade the P&L. All right. So we're set up to trade. I'll talk about risk management in a minute. I've got to do a snap now for the Traders Lab. One of the aspects of my risk management plan is that in order for a entry to be valid, it has to be a vetted trade, which I'll discuss after a while. And there has to be an unobstructed path from the entry to the first risk neutral scale. That's really a big deal, and that's a real limiting factor. So in other words, if I was up here and I wanted to trade from here up to the over POC for whatever reason, I couldn't do it because, well, I could do it because I've got this closed down. I'm sorry. you understand that if you were here and you wanted to trade up here, you couldn't do it because there's an obstacle in the way, which is a price level. That's all there is to that. All right, now I've got to make a snap for the Traders Lab, which I do every day at 8:20. Oops. There we go. What is the Traders Lab? Well, it is a Bookmap Discord chat room started by a guy or run by a guy. I don't know whether he started. I'm sure he started it or they started it for him or something. Anyway, he's the only guy there. His name is Tom B. And he is a professional trader with 14 years experience. 14 years. Jesus, I'm not doing very good here. Sorry. Trying to get this thing to snap to go and it won't. I don't know why. Yeah, I can't talk and type, by the way, at the same time. It's like walking and chewing gum or something. I don't know. There we go. All right. His name's Tom B., and he's 45 years of experience as a successful professional trader. The amazing part about the Traders Lab is, even though it's a Bookmap Discord chat room, it's completely free, and you don't even have to be a subscriber to Bookmap, which is pretty phenomenal. And from my point of view, even more appealing, nothing in the Traders Lab is for sale. Tom is not trying to solicit you to join his website or buy his indicator or do any of that typical internet guru bullshit. He's just genuinely trying to help traders get better, is all I can see. And on top of it all, I share his philosophies about trading as a business, about risk management, the importance of and how to go about risk management, trade management, that kind of thing. So, I heartily recommend the Traders Lab. It's a Bookmap Discord chat room. And there's a link to the Bookmap Discord. You got to sign up for that, obviously, in the description here. So that's that. And now we're going to get ready for the open here in about 7 minutes. I think that's covered quite a lot of everything that I had in mind. Man, I had a frustrating. Yeah, anyway, so yeah, there we go. So I think I've covered the risk management, trading, package, setting up Bookmap. Yeah, I guess so. We're kind of getting ready to roll here. And it's been it's liable to be a pretty crazy day. I would imagine light volume, but who the hell knows anymore? As Neil deGrasse Tyson said once in some interview, do you know what the 3/4 of the majority of the world, maybe more than that, I don't know the number, call this coming Wednesday? They're called Christmas Day. Wednesday. It's something that growing up in America, basically, and Christian place, Christmas is a big deal, and it's become so commercialized that even though it's not religious, sales and all that kind of stuff, but I mean, to the majority of the world, Christmas doesn't mean anything. It's just another day. That's something to realize. So from a trading point of view, I would suppose that it could have especially now with this interconnectivity and everything's electronic, that there might not be quite as much of a reduction in volume, et cetera. The only caveat to that is still the largest pool of liquidity and money and everything else is the U.S. with this, from the futures point of view, Chicago. So that will have an impact. I'm not saying anything about religion. I'm just saying about from the point of view of participants active in the market. Okay, what did I forget here? Nothing. We're going to open here pretty quick. And that's about that. I'm going to get my water bottle full and see what's going on. All right, so the open is 3 minutes. And we're going to open higher in range. So there you go. Now, the difference between higher in range and higher and lower in range in most of these statistics is not earth-shaking. So I'm not going to get too worried about it at this point. But you see what I was referring to. You never can tell what these dorks are going to do. And let me point out how that works. The differences are not that significant. So here's higher in range, open type. Here's lower in range. So let's look at the biggie here. 84.0% for overnight point of control and 84.6% for the overnight point of control and lower in range. So you see that changes by 0.6%. Right? So that's not exactly. Where the hell did it go? Way up here. So this is only going to drop to 0. Oops. Wrong screen. Sorry. There we go. What else do I have in there? The mid is 77.6. Now that's quite a change. So never mind what I said. Overnight low. Big change also. That's 51%. Oh, now. And the overnight high will be the other way. Now the other overnight high will go up. Wherever that went, I think that was over here, wasn't it? Yeah, that's going to be 75.7% of the time. All right, so there is that. Now, did I do the previous high and low? No. Previous high is 54.8. Previous low is 36.4. And you see that we've opened now, and all of a sudden, all of our levels popped in here. Previous low is 36.4. Okay. And we've opened. So now we're going to get to the business of the market here. The first thing I'm going to start doing is tracking the overnight volume points of control, or the volume, migrating volume points of control with this flag. I do that because the yellow lines will continue to plot, but pretty soon they're going to run off the edge of the screen to the left, and so you can't see them. And I don't want to be scrolling in and out and up and down and all that stuff. So we've taken out the naked volume point of control. We've taken out the mid. No, we haven't. Okay. All right, let's get over to the charts here. So here's our open, right on the close or just above it. Wherever I went, right here. Here's where we're plotting now. I'll change these to fully RTH session here pretty quick. So what? We're approaching this real major low volume area here. And these are the high and low volume nodes, which have now pushed over the minute we went to the RTH session. The minute it opened. And another thing that's interesting to do with TLAB, not TLAB, with IRT, once the session has opened in the RTH, it highlights the proper open type. So even if you don't remember how to calculate, I mean, it's so simple. It's the close related to the previous close and the open related to the previous close and the previous range. But if you don't remember it, IRT highlights it. So that's kind of handy. And that's where we are there, and back to the deal. And we're just chop-a-rama here. Don't forget that we've got news now at 9 o'clock. Where am I? Okay. All right. Confirm everything. We've got the package set up. Yes, sirree, Bob. We can trade. That's a snappy deal. And we're going to get some room here for scale perspective for me, the old guy. If I have these grid lines exposed, this is maybe I'm sure this is just psychological. If I have these grid lines exposed here, it gives me a sense of scale on the pricing, and I realize where I'm at and what I'm doing now. And this is another example here of my 3-lot risk neutral package that I tried to, or 3-lot range. Jesus, I can't talk. My 3-point range requirement. If I were anywhere down here, say I want to trade back to the point of control as a mean reversion, I can't do it. There's no spot where there's 3 points from the bottom all the way to the top. So that restriction is really limiting. And is, in a sense, we've come down here to a very low volume area and then traded back up to POC. This is the VWAP, the RTH VWAP, and this is the RTH POC, and you'll notice the difference in color. This is the RTH POC, and this is the full session. Try to get this over here where I can see better. These monitors are pretty big, and you get that kind of, I don't know what they call it, when you get off to the side of a monitor and then the color and everything gets weird, whatever that is. These two trading, I have some monitors here. I have a four monitor rack in front of me. I have two stand-up desks and an L, and then I have a 4 monitor rack in front of me and a couple of other monitors off to my left. And my two trading monitors are 32-inch 4Ks. So that covers a bit of real estate. You know, it takes up every bit of 5 feet or so on this stand-up desk. And yes, I stand up. I don't even have a chair in my office. I've got a Vietnamese hammock, but you know. I've stood up and worked I guess 12 years or something. I don't even remember when I first bought my first stand-up desk. But yeah, I've way back, even when I was doing drafting architecture, when I was a general contractor, I had my drafting stuff built to stand up. I stood then too. It's weird. Okay, here we go. Man, my, there would have been a lovely short, huh? This is, yeah, this is not anything I know about doing. Now, remember what I said, the definition of the IB high and the IB low are just the high and low the first 1 hour of this session. And so that's what they're doing. There's the high and there's the low. Pretty quick, this is going to jump down here behind the previous close. Now, this kind of a market is, you know, how do you trade this? I don't see a trigger or a way to get in it. And like I said, the 3-point range really limits me. The closest thing I could do right now would be VWAP to VPOC. That would just barely meet the criteria. 4 to 7. Actually, it's cheating because it's not 7. The VPOC is at 6 3/4. You know. So, yeah. I would say it's probably going to sell down, but you never know. We're approaching a wick test here for Friday, which is that close. We did already once, okay? Yeah. Wick test. I don't remember. I think that's a guy named Mark. Wait. Matt. That's his name. Yeah, traded by Matt. I used to listen to once in a while. He's actually just over here in Austin. But we lived in Kuala Lumpur for 11 years. And I used to listen to his shit once in a while, his stream or whatever we call him. He's the one that came up with that wick test idea. I think. Well, and that's the first place I heard it anyway. Yeah, here's that retest again. And as I said, I thought it was going to probably go lower, and I still do. Notice how the VP or the IB low is now down there behind that close. And we're quite a ways off the IB or the ETH low, which was down at 83. I don't know what to do here in a case like this. I'd like to just throw on a fast one and grab a trade and go have breakfast. But it's kind of a spooky day today, I would think. That was probably noisy. I hit my water bottle on the boom arm here. So you understand, I mean, if I explain myself properly with this range requirement, it's pretty obvious that there's no place I could make a trade except from the POC or from the the VWAP up to the POC. But so far we're not trading higher, so that would be a counter rotation trade. That's the only place where there is 3 points of range to the risk neutral scale. And in reality, if you're doing a mean reversion or something, and you're trading from the VWAP to the VPOC, that's basically your target. So where are you going to go from there? I don't know. What's this? Okay, boy. I think that means cancels are. Yeah. Everybody's on leave today, so that's pretty cool. If it were a nice active market, I could actually maybe be actually getting someplace here. Is this one? 98, 96. This is close to 3 points. The idea behind this range requirement, I guess it's as good a time as any to talk about trading as a business. The difference in approaching trading as a business compared to video game, gambling, whatever, is as follows. The market is random. You've got to come to peace with that. And the outcome, statistically proven, the outcome of the very next trade is 50-50. So what can you do in that environment? Well, you identify a setup and you identify the criteria which validate that setup for an entry. And then you capture a statistically significant data set of that setup and those criteria. Off the market is the best, in my opinion, with some software for backtesting, because then you can get more bang for the buck if you try to capture, imagine if you try to capture a minimum of 50 trades with the same context and the same setup in a live market. It might take you, 2 years? I mean, who knows, But anyway, so once you've captured that data set, you establish mathematically and statistically whether that particular setup and those criteria have a positive expectancy or edge or not. If they do, your job as a trader is to take every one of those setups that presents itself in the live market. and you rely on the law of large numbers to manifest the edge to your bank or your account. Now, this is not something I dreamed up. This is, Jim Simmons, the most successful hedge fund in the world ever in history. Ray Dalio, Tudor Jones, Tom Sosnoff, pick one. Pick any successful trader, and they'll all say the same thing if you listen to them long enough. Now, if that sounds familiar, that's also the business model of a casino or the gaming industry. They play no games which they have not properly vetted a setup or an edge, and specific rules. They know there will be winners. Gamblers will win. Traders will win. All traders will take stops. That's something that you have to get your head around. And so approaching trading as a business, this is really the holy grail. Approaching trading as a business is to approach it from a point of view of statistics and probabilities, and you identify a setup one at a time with the criteria that has an edge, and then you let that edge manifest through the law of large numbers. That's it. Okay, so the range. Well, in your trading day, you want to maximize or improve your edge wherever you can. If you try to take a trade right here, going down here with all these levels in the way, every one of those levels presents a detraction to your edge, because there could be a reaction there, a bounce there, something else. If there's wide open spaces from your entry to your first scale, that improves your edge, and that's the reason for that range requirement, in my opinion. This is all my opinion, but, it follows because this is my virtual trading journal. So that big sell-off was kind of handy, but nothing there for me that I can think of at all. This is a consolidation, so we might look for a break out of the range and then a continuation, but it didn't really do that, and it's continuing, so, The reason I'm sort of focusing here now is because this is the first area we've been in where there's some range. And down here is not the place to take the trade. That brings me to another point, which is called asymmetrical trade location. So this was kind of a breakout, and this was a consolidation or a range. We didn't really break out of it and then continue. I don't know, so this wasn't really a bar setup, I don't think. But one of the things that's real important to consider is asymmetrical trade location. If you enter a short up here somewhere, your stop can be right there. And the potential risk is down here. So there's an asymmetrical relationship between the risk and reward. If you enter down here, short, now it would work out for you in this particular instance, but if you enter down here short, where's your stop? It's right in the middle of all this traffic, which is a high likelihood. It reduces your edge because increases the likelihood that your stop will be hit when they'll trade back to that area. So an asymmetrical trade location or entry location is real important. Now, as I'm talking here, this is just continuing to sell down, and now we've gotten through the overnight low or to it, and there's going to be a bunch of stops down there, so that means we could have a pop to the bottom. But this is not a location for me because this is a breakout. In my view, that's a FOMO. So in my world, that's a FOMO deal. This stop run or this quick retracement up like that is being viewed by some folks in the Traders Lab and whatever else as an entry location. We looked below this overnight low and didn't get a surprising amount of stops out. I was kind of surprised by that. But yeah, this might be a spot for an entry. I don't know. Because it's low liquidity, I might change that. I might change my trade package to back to the original 2 lot. I'm going to think about that for a minute here. Didn't get much below that low. That's kind of interesting. Context is clearly down. So in my world, that means shorts only. Now, this could have been a bit of a bar trade here, but this, I'm not really sure the definition of that, whether the the breakout and return or revisit, it needs to be from the opposite side, the same side. I'm not sure if that matters. It's called BAR, breakout and retest. Typically, the breakout and retest, I think you want to trade in that direction, which would be right here, and that wouldn't be very handy, would it? Because down here is where we're going. So you would only be looking for those in the direction of context. Context. Here's our open. There we are. What is that down? That's down, right? That's south. It's pretty light action, 14 10s and 14s, and watch the dome over here. They're pulling and stacking in 1s and 2s and 5s and stuff. It's pretty light. And these volume dribbles here, or bubbles, or whatever they call them, those are delta. So wherever that's green, that means that there was a positive or a buy delta there. Now we're up here to the top of this thing. What are we going to do? Who the hell knows? It's pretty light, and I would be a little bit apprehensive to do something up here. I think that this MCVPOC is not applicable anymore. I'm about tempted to short here. A developing value area low can oftentimes be a pretty good line in the sand, I've noticed. And had I shorted that when I said I would, I'd be scaled right now and thinking I was pretty clever. Got to notice this real low volume area here, though. This is a place that they may start to oops, sorry about hitting that boom and that boom. Yeah. frankly, this is a gamble at any point for me because this is not any kind of a vetted setup that I have. So I'm just watching. I'm trying to do two things at once here, and I've already established that's that's pretty tough for me. Yeah. Well, we're at that mid. So that developing value area low short would have been kind of a disappointing deal. Close, VWAP, whichever one. Yeah. And the VPOC is still way up above us. So what's the likelihood of that migration? Let's look at that. So here's the VPOC, and it's right around 33-ish, I guess. Where could they go with it? Well, the closest number they've got for it is down here at 87.5, which is 27. So it wouldn't take, 500 of them, and they'd be down. They'd have that VPOC migrated down here. They could be trying to bring it down incrementally, but that's how it works. It's nothing spectacular. You don't have to have a pointy hat or a wand or anything. It's just numbers. It is the price at which the most contracts have traded so far in the session. That's it. That's all she wrote. And we're back in that. Couldn't quite get over the open there. So what I would be looking for here is an opportunity for a short, because obviously the context is down. This is the first significant pullback. But you have to also bear in mind that there's a possibility that, and there's our number at 9, consumer confidence. So there is that 9 o'clock number. That it is so light and fluffy out here. I don't know how the hell the guy would trade that, to be honest with you. This now would be a breakout, and I'm not going to go there. We have the IB30. Or the IB statistics that are coming up here. Remember that the IB high and low, they continue to move through the first hour, right? There's a very old and widely known statistic about the initial balance that's over 97% of the time in all open types. Either the IB high or the IB low is exceeded by price in the balance of the RTH session. Now that's a pretty big or in there because it can be, there's usually a wide range between the two. And also in the balance of the session, meaning it could be 1 millisecond after 9:30 or 1 millisecond before 1600. So that's a hard statistic to trade, but it's widely known and a lot of people watch it. There is a guy in the Traders Lab named Rod who's a good statistician and coder and trader, and he is continually looking at this stuff. He determined that there's a very high probability that the high of the first high or low of the first 30 minutes of the regular trading session is exceeded by the high or low or by price action in the second 30 minutes. So they call that statistic the IB30, and they call the old-fashioned one the IB60. And I try to refer to them as 30 and 60 now rather than just the IB stat. So here we are back to the low and back down to the IB low. So that bounce off the VWAP down would have been a great get on board short idea, and I didn't do it. So we have now just fulfilled the first IB30 statistic as I was talking about it, right? Here was the statistic at IB30. Where's 9 o'clock? Over here somewhere. And we've now exceeded it. Could happen 50 more, 100,000, whatever, more, however many milliseconds there are in 30 minutes could happen any of those times. But we have now satisfied the IB30 one time. So we had an IB migration here. Busy talking to a muted microphone. That's pretty cool. And that would have been an excellent IB T-Lab structured trade, or a structured trade called the IB VWAP migration. Goddamn perfect. And there was plenty of range too. Boy, that's disappearing. It's amazing. I stand here for hours. I walk away for 1 second, and bam, boom, right? So how long did this take? How many seconds right there? And I missed that one. Irritating, boy. There was our last one. It's our first migration of the day. And now they could come back up and test it, but from right here in this trigger, you're scaled, and then that's how it works. Put on your helmet, and away you go. Damn, boy, that's irritating. This is when FOMO can come out and bite your ass because you that FOMO, fear of missing out, right? The thing you have to remember about trading is it is an endless possibility or endless stream of possibilities or probabilities or opportunities. That's a better word. The reference or the euphemism in the trader's lab is it's the bus. Well, I missed that bus. I'm going to wait for I'm sitting here waiting for the next bus. Look at this, you know. That is a perfect VPOC migration south. Range, all the requirements there. Trigger, range, and we're headed south. Wow, that's disappointing. And now what I was talking about was FOMO, right? I'm obviously triggered now because I missed that trade. It should be obvious in my voice. You're never going to get over that stuff. Your lizard brain has got, you know, however many thousands of years of millions of years of evolution. Those things develop, so you're never going to get rid of them. But you need to recognize them and not act on them. FOMO, very definitely I'm experiencing FOMO at this moment. Right there. I was mad about it right there. Almost thought about getting on it right here. But that's FOMO, and I recognize it, and I didn't act on it, and I'm not going to. Maybe that's my fault, you know. But boy, this is clearly an ideal setup or a beautiful VPOC migration setup right here. I think I'll screen snap that actually because it's such a perfect example. Ah, damn it. My mouse. I got some real fancy mouse here that's got a zillion different buttons everywhere. And I'm continually, there we go. I'm continually bump it into the mixer and then it'll do some silly thing. Look at that, man. So then you have to fall back and say, okay, context is down. We missed this setup. Was the next opportunity the developing value area low test and lower? And maybe I should have been looking tightly at that, but this is now it's, you know, this line was not down there over here. This developing value area low was up here, right? And there's the overnight low. This is now breakout country. We're going further south. What have we got to look at? Well, one thing that's pretty important is at 5960 is the MCVPOC, which is definitely a target. So if you're on short up here, your target is I would be targeting right there. God damn, that's frustrating. Really frustrating. Really frustrating. I guess I should take solace in the fact that I recognize it. Not sure that I can, but you know. And of course now it's FOMO's eating my ass because I want to get on this thing, targeting that MCVPOC. The problem now is I don't really have, it's an IB30, so what? The IB's not really set. And might be a position to try longer or shorter, I mean. Yeah, it would have been a good trade. I have to be real careful about my, my ability to rationalize. But yeah, right in here, this test, well, it keeps moving, but that was up here, right? The IB was up here. So that's great. Definitely headed short for that VPOC, or for that MCVPOC, I would think. Now it's time to be a little careful. There's higher lows, higher highs in this brief area, which has not been the case all the way down through here. They might want to squeeze them up and reload it. Gosh, that's disappointing. To have seen that trade and not taken it. Wow, wow. Really disappointing. Now we got them. Now they're squeezing them. Now they're squeezing the shorts. Gosh, that's disappointing. What would I be looking for next? I guess this developing value area low test and then a reshot at the IB low. No excess whatsoever at the top. That is something to notice. There's no excess up here. You see, there's no kurtosis. Just flat. That's something that needs to be recognized, because that can often, they very seldom leave them like that. They usually always, I mean, stop and think about it. How does an auction doesn't just shut off with a bunch of volume? There's usually one or two stragglers up to the top there. That's the thinking behind all that. And we keep meandering up here to the developing value area low. Remember that initial balance is going to be the IB60 will be in play in another 15 minutes. man, that was really a disappointing miss on my part. Not a overnight low. How low can you go? Again. Yeah, there's a something stop run or sweep or bunch of absorption. I would be leery here. And I'm going to be probably kicking myself again. Yeah, well, I'm already kicking myself. I'd be scaled already. These kind of ledges like this with a big change in volume are always alarming to me because typically we go back through that kind of thing. I don't know if there's any kind of, I don't have any statistics about it, but an edge like that or a ledge, I should say, like that is always alarming to me. I remember once, I also have Jigsaw tools, which I bought and traded with years ago. There was Peter Davies is the guy that developed that. He had a deal about ledges. I remember what the hell it was. So you'd be scaled, okay, off this low, but only down here when it got down to 79, scaled again. I mean, you're still in the scale, but you haven't gotten anywhere to your targets yet with this overnight low thing. So this is starting to be a consolidation area. That's a pretty wide one, though. Now, I didn't take my own advice. You see, at any one of these points up here, I should have used the asymmetric trade concept and taken a trade. I have a hard time changing how that package is set up in my mind. Taking a trade right here and then just put my stop 2 ticks above it. Right? So it's really not expensive. But you see, you take advantage of the possibility. In this case, it's been a good one. It's, damn near 10 handles. They got towards that MCVPOC, but they just didn't get quite down there yet. I have no clue what happened today. Gosh, that's irritating. Well, I think I better get a bottle of water. Okay, what I miss now? What's this? Okay. Yeah. Quite a big wick extension down there to the low at 65 and now back up, which is I'm way too conservative or risk adverse for whatever reason here. I don't know. Not seeing, clearly seeing and identifying a setup like that and not taking it is just but stupid, right? And of course, here we come back up again, and the problem is that how many times can you drink from the well, right? And we have no VPOC migration looming anywhere. You see, we're up here at 41, and closest we got down here is 27. No, there's 29. There's a 30. Okay, so that might get us someplace. Oh shit. I'm talking about that, and I reach for my keyboard, and there we go. Wow. I was looking for one test back up and exhaustion. And now look. That didn't qualify for 3 points either, but this one did. Just barely, but that did. I don't know what to do here. I got to get over this, either relax that 3-point thing, the 3-point range, and become just more aggressive. I just have a real phobia or a real mental thing about over trading and, FOMO trading and that kind of thing. I want to be real sure I don't do that. And as a result, I don't take trades. Now, I missed that VPOC migration, which was the absolute perfect trade. Here's one that I just missed. Not necessarily a perfect setup that I particularly have, and I would want to see it go over the VWAP and the VPOC to take out all these stops and then head further south. That's what my thinking is. But when you see this and then you see 10 points, well, you kind of go, Shucks. That wasn't the right idea. Maybe. Damn it. Damn it, Janet. Well, here we have a consolidation, a breakout. So this could qualify as a bar right here. In a sense, I guess it could. But where are we going with it? Well, we've got the V, but now in 3 minutes, we're going to have the IB statistic. The IB 60 statistic will be in play. This trade is not I'm just kind of getting my head around this breakout and retest idea. It's one of Rod's setups. The ones that I have, the VPOC or the VWAP VPOC and the VPOC migration are obviously more, I've thought about them and watched them a lot more. None of them are actually vetted by myself yet. I'm trying to get up to speed with Python, and that's just breaking my old brain. So that breakout wouldn't have been a very good idea here, this breakout and retest thing, I don't guess. Because you've stopped out now. If that's what it means. They've got pictures of it. I'm going to switch my gear now from move away from the overnight. I'm going to move these to a regular trading session only. Like that. Boom. Pretty cool, huh? I also track the micros. Just, I don't know, out of habit. So here we are testing up to the overnight low again, which is still, you can still see where that was here by the price levels. But now we're just working, so they've just now filled in this big low volume area from Friday. Is this a spot for an asymmetrical trade location? Maybe. I wanted to see if I could change that delay to, well, yeah, that would have worked out. It isn't overworking out yet, but I mean, I don't really have any kind of a thing that is a retest of the previous overnight low that I know of. Here we are, VPOC migration. Now let's get back to the thing at hand here now. Okay, so is that a test up? I get burned frequently on these things, but we're going to try that. Oh man, what happened? No trade. Shit. Well, that's irritating. There we go. So there's a, this is a VPOC migration trade south, and maybe it's a little bit late on the entry. I should have had this up above when I tried to hit it the first time. We'll see if we get stopped out or what happens. I would say yes, we're going to get stopped out. I'm going to put this stop just, not in time. Stopped out to the tick. Well, there you go. That shows you what a late entry will do. And now it's going to, of course, just rip on in the right direction. Man, I was just trying to move that above the overnight low. Wow, that's irritating. So, yeah. Merry Christmas. Ah, boy, you got to love them when they're right to the tick. Well, that feels a little better, I guess. At least they're going to get up there and be obnoxious about it. Well, that sucks. So up here would have been the outside in. This is that low volume area up here around the, right there where we tested to. I thought I was pretty close right here, but I guess not. Now I have to be careful about a re-entry on this trade because of the asymmetrical trade location idea, right? Up in here would be magical. Still have the IB low down there, and it is in play now at this point. See, what we're doing at the moment now, even after it's migrated, is basically it's a mean reversion, right? So we're outside in, looking for more outside, but this has been a mean reversion play from here down. And are we going to get more upside, more outside over here? We need to get up into this area before it's reasonable to enter, in my opinion. I was thinking that this was a good one. Well, actually, no, this was a terrible one. This was a terrible entry, actually. Got the wrong screen going on and everything else. So here's a bad entry, one tick stop, but it came back to substantially spank me. Now we've got the full session volume profile migration also. So both of them are down here. I would suggest that this was probably a good entry spot up here when we retested up to this low volume area. Now is not a good entry spot. Now it's smack on the VWAPs, VPOCs, I mean. Entry location is really important. It makes such a difference because of the relationship with your stop placement. And, you enter down here, where's your stop? It's in the middle of all of this stuff. This was a poor entry on my part. Getting up in here someplace might be okay. I don't know whether they're going to continue to sell this thing down and go for that IB low, or whether they're going to go up here and take the other one. That's the part we don't know. I'm about half tempted to put on another trade at this point because I'm sort of bored of just standing here. Merry Christmas. This is not looking too good though. We're in this consolidation area. The zipper. And here we go. Oh, yeah, up here to the mid and VWAP and everybody else. Now, there is also a VWAP mid VPOC trade set up. So let's see what happens here. And we're coming up to price check at aisle 3. That's another one. I'm going to do that one right there. That's a price check at aisle 3. Or a VWAP mid VPOC. And we don't know what's going to happen. Whether I've got this in a little bit low spot or not, who knows? Looks like they're trying to squeeze it some more, so we'll see. It's random, remember? I think that I waited for an opportune location. Could have just been a little bit early. Had I not had that one stop ahead of me, that would have been a big help. See how having these levels in the way reduces the edge? Bounce here, bounce off the mid. Those are the kind of things that, that's why the range, which I didn't pay attention to here, but that's why for that. That's why that's there. Getting some selling here. Let's see if we can get down to that range risk neutral trade scale, and then things are good. Well, that was pretty close. Is this thing in the wrong spot, or what's the deal here? Maybe because of this low volume area here. I don't know. Well, that's pretty disappointing. That's twice. Your goal as a trader, obviously, is to get that risk neutral scale. Now that's twice. That's twice that thing is missed. I'm going to move it up one tick because of that low volume notch there. I don't know. That seems to be, there we go. Now it makes a difference. Okay, so there's our, there's the risk neutral scale off. And you see, because I moved that up one tick, I've got to now move these down. And I always move them one under to cover a commission or whatever. And we'll see if we get our second target off. Again, that's right above this overnight low. My positioning was just sucks here on across the board. I'm going to go right above this overnight low by one tick. That's not really a good thing to be manipulating the targets and stops, but on the other hand, this liquidity and light market seems to be pretty spooky, so. And I have the option of bringing the stop up here to eliminate that. There we go. There's our second one. Now what I'm going to do now is okay. Now you'll notice something here that's pretty important. Look at where the break-even line has gone. This is now break-even. So that's your theoretical average, right? This is entry, and that's break-even. I've got to go all the way back up here to break even or scratch on this trade. My ultimate limit is down here. And I think I will pull my target up at least, or my stop up at least to my first break even. My typical thing that I've been working on is to, once the second target is achieved, to bring my stop to the first one. We did get a little bit of a VPOC migration here, which is kind of disappointing. I may bring this up to that second, and you see how I may bring that up to that second one, because now we've actually reached our risk neutral. I mean our mean reversion. So I'm bringing this up to here, and we'll see if we get down to our second target down here. I may bring this trail the stop up to the VPOC just to lock in that added amount of profit. Shift down, okay. Probably trade across it now. Like to hit that third target. That'd be kind of nice. Not much hope there, but let's see. I'm coming down here above this swing high. Getting some selling there. That's good. So you can probably understand that there's a big difference in my once you're in a position like this, your psychology is completely different. And I realized that I've trailed up really tight, but I wanted to not lose any more money, all right, or not lose any more potential profit. So you can see where that break even was in my trade management. Okay, so that's the screen snap for that trade. And that's, oh, come on, man. Well, I tell you, this freaking mouse, me and this mouse we're not getting along so good today. Okay, I want to take this snap. There we go. And I want to add that chapter marker. That's going to be a minute or two late. And now we did get to my target right there, just moments after that. So had I been not the little weasel diesel that I was, left my stop here, I would have achieved T3 right there. So that's, that's a really hard call. That's why I think it's so important to be able to have a good back test environment where you can do those what ifs. And I'll be the first to say that I was trailing that up tight because I didn't want to give any back. Now that trade was about, we were 600 down from the first stop and we're up 337. So that was a $900, basically $1,000 trade. Once I take all three stops, once I make all three targets, that's this 4-lot setup or package is a $1,200, assuming everything went at their levels. And I was doing some adjusting here and there, so they would have been a little bit off. So that's got me plus $370, $400 after making up for that $1,000, $600 stop right here. So, All right. So, yeah, well, there was our target without a question. And so I, wussed out here. And had I trailed as per my plan, I would have not taken any heat. And I would have been T3. But anyway, better to sharp stick in the eye. And I'm happy with that. I mean, and now it's next, right? Okay, so I got something else done there, and disappointingly, I wussed out. Would have been nice to pick that extra full trade, all three targets up. And now they tested it again to the value area low, and trading it back up again. So I will be watching closely. Still have that IB statistic open, the IB 60. We have not taken out the low or the high. And that's let's see here. What is that actually? I can tell you what that statistic is. In this day type, well, if the statistic or the probability is 97.9% that we will take out one or the other, if I'm not wrong, that would mean that the probability of not taking out either is 2.2%. Could that be right? Yeah, that would be right. The statistics report or study doesn't show taking out either. It shows taking out both, taking out one or the other, and then 1.2 times and twice and all that kind of stuff. But if I'm not wrong, it's just 100% minus this one should be what the statistic or the probability of not taking out either one is, or either. How do you say that? I don't know. Maybe not. And maybe it doesn't matter. Chances that we will be an inside day is extremely high. This is Friday's range, and here's today. They'd have to do some magical crap to get outside of one of these ends and one of these extremes, I think. So I don't guess that's going to probably happen. I think tomorrow is also a full day of trade, but I don't believe there will be any overnight starting tomorrow at 1700. I do, but then it does close, and then it does reopen at 1700 Christmas Eve, Christmas night, I believe. I got to look at that. Well, shucks. I wish I'd have just held my, been a big boy and pulled my boots up and gotten that third scale. That would make me feel nice. Not that I don't feel okay now, but, I'm taking here rather than here. That's 3 more handles, right? Or 4. Oh my God, what is it? Hold on a minute here. 80, 75, 76. Four handles. So, yeah. Eyes are itching. Yeah, so, yeah. Okay. What are we going to do now? Testing that developing value area high. And then the close, maybe. Quite a big low volume area right at this spot here, this 92-ish here place. Right here. And it's easier to see on IRT some of these things, but you see we haven't dropped below this level since a little after 9. We pushed a low in, and then we haven't gotten down below there since after 9. We did have a VPOC migration right here, which is what I got a hold of off of this mid VWAP up here, or OL right here. And now we're up above it. Will we test the upper limits? That's what we don't know. lot of stuff going on right here. That Globex VWAP, developing value area high, close, open, previous close, RTH close, Friday open, and settlement. So, yeah. I mean, we've been up and down through all of this already, and there seems to be a gigantic pile of liquidity laying up here over and above all this goofy bracketing algo crap. And this is pretty real. This is, damn near $1,500, 1,500 contracts or so living up there. And they've been in the market. They've been sitting here since they started feeding in about 9 o'clock, and they've been building up. So, Wow. So that was quite a bump to the top. Of course, that would have been a lovely long with multiple gazillions of dollars. Not that I'm unhappy about where I am at the moment, but one more trade would have been nice. And right off my bottom over here. So obviously we had a context change, and I was still leaning south. This probably would have been it's always so easy to see. I was talking about this liquidity, and if we got through it here, so that would have also been a good one. 15 handles up to there. Well, and they're going to get that overnight volume point of control for the 84% statistic. See how that works? Took the mid, and now we're going up for that 84. That's pretty credible, huh? I'm sure sorry I didn't take that. This, test, and then up, I guess. I don't really have anything that says that, but I don't know what that setup would be, actually, other than just look out long. Lovely. Absolutely lovely. And we overnight high is still up above us. Can't seem to get that to work. I don't know. Yeah, so we're right up here banging on this overnight volume point of control. And that would have been great. That would have been pretty substantial amount there of ticks. What is that? Well, that's 72. So there's 28 and 20, 48 ticks, 48 handles, excuse me, times 4, 170 something ticks. Yeah, so that was quite a that was quite the run up. And I gotta say, I have no idea how I would have dealt with that. Yeah, it didn't quite get there, but it got mighty close. And look at how those. And again, this is where, you want to be awfully cautious about FOMO and many things like that. I'm not going to worry about it. I got something else going on here involving breakfast, I think. Yeah, that would have been nice. So the reason it's important to take your time and really find a setup that you've already identified and properly vetted. It's so easy in this rearview mirror trading, right? To look, or looking backwards. It's so easy to say, well, I saw this and we had exhaustion here and I got on this long and I've made all this money. That's what the internet gurus do. You'll notice that nobody's ever trading the hard right edge. So, or very few. That's something to be really cautious about. Well, there's that excess that I said we were missing at the top. And now we've got it. So we could conceivably rotate back down to the mean. Yeah, very definitely. We could rotate back down to here for sure. Because we've managed to put in now that we've closed off this big block that was here, rotated up. We've also taken out the IB high. So the IB statistic is satisfied. Is this going to be an IB failure? That's an interesting idea. Will this be an IB failure? Which would mean test back up here to the IB and then continue on. The IB continuation trade would be up here, test back, and keep going. Looks like we're already in IB failure mode and I'm late to the party. Testing those highs again. I'm unlikely to make another trade today. I feel like I did pretty good on those two trades. The first stop and then recover for a positive. I don't know, $300-400 or something like that. So about I guess 20 something ticks. Net positive. After making up for the 48 tick loss stop. So that's okay. And these dancing around these highs, light volume. See what that volume is actually. Well, we're 102% volume for the day so far at this time of day. This is a relative volume for the ES day session. Typical is 599 for by now, and we're at 613, so we're 101.9% at this time. And when we were taking off, we were overnight. We were a lot, or right into the morning. There, we were quite a bit higher. So there's that. That's not to say that we're not going to go up here and take the overnight volume point of control out. That's the most likely target at 24%. Man, I wish this would stop doing this. This mouse and I. We're not getting along. My, look at them try. The closer this day gets to the cash close, I would say the more precarious any kind of directional movement would be. I'm pretty pleased with the fact that I got the 2 trades off. I did. I'm not very pleased with the first one, which was an immediate scratch, of course, but the second one was fine. Not managed maybe as good as it could have been. I think I can, I think I can do this. No, I thought you could click beside that and then see what you had. There it is. So here was my entry. This was a VPOC migration test of the previous VPOC high. Also, it was a VWAP mid to VPOC, kind of 2 or 3 trades. The only thing that it really did not satisfy was my 3-point range. Didn't come close to any heat, really. Always interesting how this is a theoretical average, right? So once I hit this scale, the theoretical average for the scratch break even comes to here. I always take the stop 1 tick under just for commission's sake. Then by the time it hits the second one, this is where we go. So it would have to price would have to go back to here to break even. I started trailing at the second take profit, which is what I'm part of my plan at the moment. Then when we got down here, I started thinking, well, I'm not going to give this back. So I trailed up too tight, taken basically to the tick with no heat. Had I left it at this stop here, or this take profit, then it went straight on down to my third take profit. But what happened as far as trade management was I took it off at this trailing stop. But this trade compensated for the 48 tick loss here on this first trade stop, plus another 24, 25 ticks. So I'm net $337 for the day, where this first stop loss was $600 minus. So I'm about just shy of $1,000, just a little less than 48 ticks, $1,200 or $12,000 on the second trade. Net 1,000, which is about 24. Actually, more than that. It's about 25, 26 ticks about positive. So that's where it is on the day so far. Now, this is probably going to be the only far. As we come into 12 o'clock, I would suggest, anticipate, suspect, whatever, that we will take this overnight volume point of control, but it isn't worth my gamble. Certainly not with a 4-lot. So and it's the day before Christmas Eve, and it's not light volume, as we're just looking at a few minutes ago there on that relative volume chart that I have. Hope I've got the mic and stuff in the right spot. Yeah, so far, disappointed. That first stop is always disappointing, but this is a good reason, or a good example of why trading with a greater than a 1-to-1 risk reward is so important. This is basically a 1-to-1, right? It's because the stop is at 12 ticks. Remember that the risk neutral plan is this. This is for a 4-lot. Same exact thing for a 2-lot. Just this has 2 contracts and the other one has 4, so you're able to put another runner in the middle here. But let's look at the 4-lot. Both stops, all 4 contracts stop at 12 ticks. The risk neutral scale is at positive 12 ticks for half the package. All right, so this is essentially a 1-to-1. This is 1, right? This is the first take profit. This is the first stop. So it's a 1-to-1 relationship. So over here, this stop is $600 or 48 ticks. All right. This is 1. So right here, if I took all 4 of them off, would be 1-to-1. But instead of that, I'm able to, now it's risk neutral. Then I can take advantage of these others. And had I not been such a wuss and trailed up too tight, I would have gotten actually both off, which would be, I think it's 96 ticks or whatever. I have to figure that out. Well, it's 24. Yeah, it's 24. And another 24. 48. And another 24. Is that right? Yeah. But I did take it off here. So that's the importance of, if I were trading a 1-to-1 risk reward ratio, I would have had to make another trade at some point in this morning to be where I am right now, which is to have compensated for this double loss or this full stop and be up, $300-400. That's why in my opinion, it is so important to work with a package and a time frame that you can look for more than a 1-to-1 risk reward ratio. And undoubtedly, we're going to take this overnight volume point of control target, which is our highest percentage probability at 84%. At some point between now and the cash close, that's going to go, I'm guessing, pretty damn quick here. There's a statistic in the T-Lab that, if I'm not mistaken, is to quote this, Rod is cooked up, that if, no, we're not there yet. No, sorry. If the VPOC migrates above the IB high, outside of the IB, so either one high or low, is a very high probability that we're going to make new highs and close on highs in that direction. This is essentially an IB continuation trade that we're having now. Traded blowout, came up, a little bit down again, and here we go. Again, rear view mirror trading, right? It's so clear. Tell me where this price is going to go right now. That's the difference in the hard right edge. And the difference from the hard right edge and being an internet guru. Well, there we are. So I was a soothsayer. The next stop is going to be that overnight high. If they keep this up, very definitely a target. High volume node across this low volume area, the overnight high. That would be very possible. So this was actually a problem with it, like the IB continuation. Say, imagine that you took it here, and now you're stopped out, and you're going, son of a gun. And now you got to do it again. That's the problem with all of these setups, is you don't know which, how many times are they going to test it, or when is the last test? That's why rear view mirror trading is so easy. If a guy's got a good gift to gab, well, you can just jabber up a storm, unlike in my case where this is my training journal and everything that happens here trade-wise is absolutely live. And it's worth pointing out that this test here is from 08 to 22. Actually, nice price action today, really. The my stuff was over here, but after this consolidation, when the tanker turned and the context changed to up, or if you want to look at it, if you want to squint, it's basically mean reversion. It's rotational, down and up. Wherever my mouse went, there you go. Down and up and maybe back and down again, but keep in mind that the POC is down here. Took out the IB high, an IB continuation, and targets north, right? So the ETH VPOC has already been taken out, and nobody says we've got to get to the ETH high, but it is the next feasible target on the menu right here. And it's only 10 handles off of this. We've come off the bottom. We've come off the bottom 65, 59.65 up to 60.21. So 35, 45, 55. We've come across range 55 points. This holiday break, I'm going to have to clean up all these gap highs and all this crap. I think we pretty much wiped them all out now. The way I do these is just a gap high or whatever, and the date, 21st of November. That was the gap high, and this is the gap low for the 7th of November. But those are all over here, right? Come on, mouse. I don't know. Gap from here to here. 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 We haven't cleaned this one up yet. Gap from here to here. Got awful damn close. Yeah, I think we actually did. Wait a minute. No, 5 points away. This is 93.5, and this is 98.25. So, didn't quite close this gap. This big one. Got all the rest of this crap tidied up though. looks like the Christmas and the Santa rally is going to happen. They want to get up there to that overnight high again. So excellent move off the low. Excellent move off the IB continuation. So this is the trading statistics and book map. That's kind of cute. It does show the ticks, which is something I'm always interested in. And maximum. I wonder why it didn't show that here. MAE and MFE. Oh, there we go. Because there is no adverse. There was no drawdown. Did get up to 85 ticks, so I left 10 ticks on the table. According to that. Bad boy. I'm not sure how the hell. I'm making screen grabs of this crap because I'm not sure I remember how to export. I think I do, but to static. So just kind of for the hell of it sort of a thing here. This is an iceberg indicator. You can see that there was two icebergs up here. So far, there's been only one traded through, 195 contracts. We had 48 stops for eight orders up here. There's 19 for 6. That's kind of what all this junk is. These are absorption. These dots are stops. This is buy absorption, or sell absorption, I'm sorry. And these are buy absorption. So they bought 230. They absorbed 230 selling contracts. Unfortunately, this bracketing algorithm on both sides is only started a couple of 3 months ago. They turned that thing on, and it's been a pretty big mess. It's kind of disappointing. It sort of skews up what you see in the rest of because first of all, there's barely no difference in liquidity. Look at these numbers. And up here, there's 360 and there's 360. It just came in the book. And again, and also these up here, here's 131, been sitting there for a while. So, yeah, it's kind of skewed the heat map a bit, maybe. I've actually built a similar thing in IRT. With the delta bubbles and the heat map, and the problem with this particular thing, and then there's a dome alongside of it. The problem with this thing and then I've also got the price levels plotted against it. But the problem with this on IRT is that it doesn't remember. You have to have it the focus in order to have it plotting. I go away and come back, it will not have kept up. But it does work. Works pretty well. If you look at this over here and then you look at book map stuff, it's you can adjust the plotting and all that kind of stuff. So I did this in case something should ever happen and I had to rely on this for something trading. I've got all the order facility, trade facilities up here, and trade viewer and all that stuff. So a lot can be done with IRT. You can see that this is fairly, I wouldn't want to say it's more or easier to see, but if you look at that, look at this, look at that, look at this. Pretty similar, except I have the different ball or volume dot settings on IRT. I don't ever mess with it much. Pretty robust program. God damn, I don't know why it's doing that, but boy, that really irritates the crap out of me. I don't know why this keeps doing this. I don't want it to do that. It's not supposed to do that. Now it doesn't want to save very good, apparently. Okay. This is not right. Well, they're going to bounce it off. You'll see it go up there and get the overnight high. Probably. Probably so. Probably so. Thought I heard some clipping the last time I was listening to this. I don't see how that could be happening, but who knows, maybe. This iceberg works here. You set it here. They traded into him right here one time, and he's still waiting for another trade. But he did trade in. I mean, he did trade out one. And it's an iceberg, right? So that means there could be 10,000 contracts in there. Wow. That would have been a hell of a nice one off the low, huh? They always are. RMT, baby, rear mirror trading. Okie dokie. Quite a nice methodical march to the higher ground. Terrible to get on for me. This, just stair stepping up gradually. Doesn't work. Isn't easy for me. I mean, not that any trading is easy, but I find those kind of days problematic. Oh, look at Mr. Iceberg drop down. He's still selling them. There he goes. Executed 30. So he was showing 1 or 2, and he executed 30 of them. I would guess that was a sale, right? Sales. He sold Iceberg, so that guy was taking profit. He was taking profit right up here, and he wanted to go to lunch or go home or something, so he dropped it down here and took it off. And what the hell anybody be buying for is phenomenal to me, but yeah. So the 1 o'clock hour. Remember, all times that I talk about or that are on my screens are Central Standard Time, which is the same time as the market or CME. And here comes that last target. Beautiful, long, methodical march higher. I'm disappointed that I wasn't involved, but had a couple things develop here, so I had to put me off. I've talked about this before, but anytime I feel myself with something wrong with my system, data, personally on tilt, just step away. And I've never quit watching or narrating the market, but I wait till I'm completely 10 by 10 before I re-engage. The VPOC or the IB continuation trade was excellent. So was ironically, the turnaround from right at my low would have been fantastic. But again, it's the hard right edge. When you're sitting here, tell me what you think's going to happen. That's what Tom does, right? You have no idea. So far, we've had 1, 2, 3 all night. Here's the open. Oh, I'm sorry. Opened back over here. Here's the open. Down, down we go, down we go. So you have no idea that that's going to happen. Or if you do, shoot me an email. And we're going to have that overnight high target pretty darn quick. Well, so got tried, stuck out a little bit there. Sorry about that. But all right, it's 15:35. Typically, I close the stream at 1500, which is the cash close. And I'm going to do it now, and then I'll set up those chapters, and this stream will stay live. Stay public, I mean. So, yeah, well, Merry Christmas and whatever else. I'm going to be back online tomorrow morning at 8 o'clock on 0800, as usual. All the best.